When the world fractures and geopolitical tensions spike, global capital panics. But when that panic sets in, where exactly does the money run? For decades, the answer to that question was entirely predictable. Investors facing war or sudden economic shock would immediately pull their wealth out of volatile markets and park it in two highly specific, supposedly untouchable assets: physical gold and the reliable backing of United States government debt. But during the recent sharp escalation of conflict in the Middle East, that predictable pattern broke. This chart shows exactly what happened as those tensions peaked. The red line represents traditional markets shaking and dipping exactly as you'd expect. But this blue line violently spiking upward in the exact same time frame, that's Bitcoin. Institutional investors were suddenly treating a famously volatile digital token with the same reverence usually reserved for a 2,000-year-old rock. Investors are looking for more than a store of value. They are seeking a way to bypass the mechanical vulnerabilities of the traditional banking system itself. To understand why, we have to look at the mechanics of moving money during a crisis. The first major hurdle is the friction of speed. This diagram maps a standard international wire transfer. To move fiat currency, government-issued money like the dollar or euro, across borders, your capital has to navigate SWIFT codes, correspondent banks, clearinghouses, and strict operating hours. In reality, this means moving your money takes days. And if you are in a deteriorating geopolitical situation, your capital is trapped in transit while the ground shifts beneath you. Now look at Bitcoin's architecture. It strips away every intermediary. There are no correspondent banks, and the network does not have closing hours. Wealth can be transmitted across the planet in minutes, entirely independently of human approval. When panic hits, the speed at which you can mobilize your capital becomes just as valuable as the capital itself. But speed is only half the equation. The second, arguably more dangerous vulnerability of legacy wealth is the friction of trust. During a conflict, governments can and will intervene. They have the legal authority to freeze assets, impose strict capital controls, and legally trap money within their own borders. The digits you see in your traditional bank account are ultimately just a localized IOU, completely subject to the laws of the jurisdiction where the bank physically sits. Bitcoin operates on a completely different premise. It isn't a physical object, and it doesn't sit inside a central vault. It is simply code maintained by a decentralized ledger, a record-keeping system distributed across thousands of independent computers globally. Because the network is distributed everywhere, it cannot be shut down or frozen by any single government authority. If one region goes dark, the network seamlessly routes around it. For individuals or institutions trying to pull their wealth out of the conflict zone, a purely mathematical, borderless network offers ultimate geographic immunity. To be clear, Bitcoin is not replacing gold or U.S. Treasuries overnight. This proportional area chart illustrates the current market scale. The massive sections represent the total value of traditional safe havens, which still heavily dwarf the smaller, though rapidly expanding, footprint of the digital asset space. Yet, despite that difference in volume, this shift represents a change in how investors respond to global instability. For the first time, a digital network has functioned as a crisis hedge alongside sovereign debt. Humanity now possesses a globally recognized asset of significant value that can be transported instantly, completely outside the confines of the legacy financial system. As global uncertainty and geopolitical risks continue to rise, the appeal of an unseizable, borderless asset will only compound, which forces us to reconsider the future of capital flight. When the next global crisis erupts, will money run to the vault or the network?